What is up, guys? It's your boy Kev. Welcome back to yet another analysis video where I'm going to be sharing with you guys some tips and tricks on how to improve your trading. And in this video, I'm going to be showing you guys how to look for the right setups and how to avoid being trapped into the market. So the most important thing that you guys have to understand about trading is that it is all about waiting for the right time to actually trade the charts. You have to learn to have patience. First, you have to have the patience on waiting for the right setup to actually emerge before you can start trading, and also the patience to wait when you are within a trade for the market to actually push into your direction. So you shouldn't just be entering a trade and closing, entering, closing, because the market is just moving up and down. That is what a lot of beginner traders actually do. When they start seeing a little bit of red on their account, that's when they start closing their trades, thinking that the market is actually going against them. So you have to learn to have the patience to know that the market is not going to be moving in, it's not going to immediately move into your direction. There's going to be a little bit of drawdown before it moves into your direction. So you have to have that patience to actually wait until it plays out. And of course, you can always just put your stop loss and don't ever close until the market actually takes you out of the trade. The one thing that I want to show you guys is I just want to draw this. And I believe that this is gonna improve your trading so much. When the market is actually moving in an uptrend, let me just do this. When the market is moving in an uptrend like this, what a lot of people actually do is that they want to trade at random places within a chart, within a channel like this. They want to trade here, and they also want to trade here, and they'll also just be trading at random places. But what I want to show you guys is how defining where to trade and when to actually trade is going to improve your trading so much. You're also going to be avoiding making unnecessary losses in the market, because I think that a lot of people are just trading markets that are not clearly defined. You have to clearly know where the market is going. You have to know the direction of the market. If the market is actually pushing to the downside, you have to push with the market to the downside. If the market is moving to the upside, you have to move with the market. You shouldn't go against the wave. You shouldn't go against the trend, because that is just a recipe for disaster. So when you have a clearly defined channel like this one, you're going to know that you're only going to be trading when the market is actually on the lower side, on the support side, because it's actually pushing to the upside. The trend is pushing to the upside. The bigger momentum, or the animal that is controlling volume within the market, is the bulls. So the market is actually moving to the upside, and you have to move with the market to the upside. So the first thing that you have to do to improve your trading is to know when to trade. So when the market is not giving you a clear channel on where it's going, I always say that wait for the market to actually give you a clearly defined channel. It almost has to look like this. If the market doesn't look like this, it is not advisable to actually try trading, because that is just a recipe for disaster. Let me just give you an example. If the market is moving like this, it is not clear where the market is, what the market is actually doing, and where the market is actually going, because it's just moving in random directions. You have to wait for the market to actually give you a clearly defined channel on where it is actually trying to move to. When I draw my channel like this, you can clearly see that the market actually bounced on this level right here. So it bounced one right here and right here, and on the lower side, you can clearly see that price has been bouncing on this level. This is a simple textbook channel where I can clearly see what the market is actually doing. But when the market is not giving you clear directions on where it is actually trying to go, it is best to actually step out of the market and avoid trying to take that trade. So when we hop a little bit closer to what was actually happening right here, remember, I want clearly defined channels, because those are the ones that are actually going to show me where the market is going. I can clearly see that the market is actually creating some kind of a resistance level right there. And on the lower side, I can see that the market was creating this level right here. When you have your chart looking like this, you can clearly see what the market is actually doing and what it is trying to do. When I zoom out a little bit like this, you can clearly see that price is actually bouncing off of these levels. Every time when price comes here, it pushes to the downside. Every time when price touches this lower trend line right here, it pushes to the upside. And that is clear, simple, and straight to the point. But when you try to trade a market that is just moving in random directions, that is when you're actually going to be losing your money in the market. I can guarantee you that you're going to lose money in the market because you don't clearly know where the market is going and what the market is trying to do. So you almost have to put the odds in your favor. You have to make sure that you clearly define what price is doing and where price is actually trying to go. In an example like this one, you can clearly see that the market is moving all the way to the upside, and it's simple for me to know what price is actually trying to do. Every time when the price is actually going to be pushing to the downside, so when the market pushed all the way to the downside right here, let me just highlight this area. So when we had the chart pushing to this level right here, I knew that there were higher chances that the market was actually going to push to the upside because of how price has been behaving within this channel, this bigger channel and this smaller channel. I know that it is highly probable that the market was going to start pushing to the upside. So let's go to a 4-hour chart so that I can show you guys what happened there. So when we get to our 4-hour chart, we can clearly see that the market actually pushed all the way to the upside in a huge impulsive move. Let me just remove this. And when it came back down right here, I knew that there were higher chances that the market was going to start pushing to the upside. So I didn't have to guess where the market was going to go. I already knew that there were higher chances that price was going to start pushing to the upside. And obviously this is where you would start looking for your confirmations for price to actually start pushing all the way to the upside. I can immediately see that price was bouncing off of these levels. Price was bouncing off of this level multiple times. We can clearly see that we have multiple touches right here. We have a touch right here, and right here. And that's when you would actually start preparing your buys to move all the way to the upside. And that's exactly what price did. Price pushed one more time and created that leg. And that's when you would start taking your long positions to push all the way to the upside. And that is how you would actually be able to take this trade. Remember, you want to clearly define what price is doing. You want to understand the behavior of price. If you can know what price is clearly doing, that's when you're going to correctly predict where price is likely going to be going. But when price is actually moving in random directions, it's not going to be easy for you to know what price is trying to do or where price is trying to go. Let's look at an example. This example right here, you can clearly see that right here, price was not clear in what it was doing. So when price is doing that, it is best to actually step out of the market. When price is doing this, you don't know what price is actually doing, and price is not in a clear channel, either moving to the upside to the downside. It's just moving in random directions. You want to wait for the market to actually give you a proper channel that is clearly defined, and it has proper points like these. And when you have a channel like this drawn, you're going to know that every time when the market is actually going to be pushing to the upside or touching your resistance level right here, there are higher chances that it's going to push to the downside. But obviously, if it breaks out of that level, it's going to continue pushing all the way to the upside. And every time when price is going to be coming to the downside right here, there are higher chances that the price is actually going to start moving all the way to the upside. And that's exactly what's been happening in this channel. We can see that price came to this level, pushed down, and when it came for the third time, this was going to be a strong confirmation that price was actually going to move to the downside because of what it was doing in the past. And when price actually came to the lower side, there were higher chances that price was actually going to start pushing to the upside because it was on a clearly defined channel that was moving up and down. And this is our support. And knowing that we are in an overall strong channel pushing all the way to the upside, when price actually came to the lower side right here, there were higher chances that price was actually going to start pushing all the way to the upside. And that's why when price actually pushed down a little bit right here, we knew that there were higher chances that price was actually going to push all the way to this point right here, because it's been bouncing up and down. And when it came to this level, price actually just started pushing all the way to the upside. This is where you would also look for your reversal patterns, your double bottoms specifically, because this is on a lower side, or your inverse head and shoulders. I think I can see an inverse head and shoulder right here, because price is at an area of value, an area of support, And we know that because of the clearly defined channel, price has higher chances and more probable chances of actually pushing all the way to the downside. I can guarantee you that if you can do this every time when you approach the market, if you can look strictly for only pairs that are giving you clearly defined channels that are either moving to the upside or to the downside, you're going to reduce making unnecessary losses in the market. You're going to reduce your chances of making unnecessary losses in the market, and you're going to start trading quality trades and not just trading anything that you see in the market. If you guys actually gained value from this video, please do make sure that you hit that thumbs up, subscribe if you didn't, and ask any questions that you have in the comment section. I am more than happy to answer your questions, and peace.